Listen to me, because what I'm about to tell you is the difference between retiring on a yacht and spending your golden years clipped to a budget that barely covers your property taxes. Everybody thinks cash is a safe haven. They think they're being smart by sitting on the sidelines, clutching their greenbacks while the market swings. They call it dry powder. I call it a slow-motion train wreck. If you aren't making your money work for you every single second of the day, you are losing. You are literally bleeding out, and you don't even have the decency to notice the wound. Cash isn't a strategy, it's a liability when it's stagnant. You've been lied to by people who want you to stay small and stay scared, but I'm here to tell you that safe is the most dangerous word in the English language when it comes to your wealth. Before we dive into the cold, hard math of why your savings account is a dumpster fire, I want to ask you something. Look at your portfolio right now. How much of it is sitting in a low-interest checking account or under a mattress? Tell me the percentage in the comments below and be honest. Are you holding back because you're waiting for a better time, or are you just afraid? I want to see where your head is at. The biggest mistake people make is thinking that $1 today is going to be worth $1 tomorrow. It isn't. Not even close. We live in an era where the purchasing power of your currency is being systematically dismantled. If you're holding cash and it's not yielding at least 5%, you're getting poorer by the hour. Inflation is a silent thief that doesn't care about your feelings or your financial security. It eats your lunch, it eats your dinner, and it leaves you with the scraps. When I look at a deal, I look at the internal rate of return. I look at the yield. I look at the cash flow. If I have $1 million sitting in a vault, that $1 million is doing absolutely nothing for me. It's unemployed. And in my world, if you don't work, you get fired. Why would you let your money be the only thing in your life that doesn't have a job? Think about the opportunity cost. This is what kills the average investor. While you're sitting there waiting for the perfect moment to enter the market is already moving. The compounding interest you're missing out on is a debt you can never repay to your future self. I've seen so many people try to time the bottom. They say, Kevin, I'll get in when things settle down. Guess what? Things never settle down. Volatility is the price of admission for wealth. If you can't handle the swing, you don't deserve the gain. By holding cash, you are betting against the ingenuity of the global economy. You're betting that things will get worse and stay worse. But history shows us that the winners are the ones who stay deployed. You have to be a disciplined soldier. You have to put your capital on the front lines and let it fight for you. I talk to entrepreneurs every day who are terrified of losing what they have. They work 20 years to build a nest egg and then they freeze. They put it in a high-yield savings account that pays peanuts compared to the real inflation rate. You have to understand that the banks are not your friends. They take your cash, they pay you a pittance, and then they lend it out at 10 times that rate. They are using your money to get rich while you sit there feeling safe. It's a joke. It's a scam. If you want to build real generational wealth, you have to break the cycle of being a saver and start being an allocator. An allocator understands that cash is just a tool, not the end goal. It's the fuel. But if the fuel is just sitting in the tank, the car isn't going anywhere. Every time I see a balance sheet with too much cash on it, I see a missed opportunity. I see a lack of imagination. I see a lack of courage. You should have enough cash for 6 months of personal expenses, maybe a year if you're conservative, but everything beyond that needs to be out there earning a dividend, capturing a capital gain, or funding a business. If it's not growing, it's dying. That is the fundamental law of the universe, and it certainly is the fundamental law of Shark Tank. I don't want money that sits around. I want money that goes out and brings back friends. I want more money, and the only way to get more is to take the risk of putting it to work. People ask me, Kevin, what about the risk of a market crash? Of course there's a risk. There's a risk every time you walk across the street, but the risk of being out of the market is far greater than the risk of being in it. Over the long term, the market has always rewarded those who have the stomach to stay invested. If you're holding cash because you're scared of a 10% correction, you're going to miss the 100% gain that follows. You're trading your future for a false sense of comfort today. That's a bad trade. I would never make that trade, and neither should you. You need to be cold-blooded about this. Take the emotion out of it. Look at the data. The data tells us that cash is a melting ice cube. If you hold it too long, you're left with nothing but a puddle. I want you to think about your goals. Are you trying to just survive, or are you trying to thrive? Survival is for people who work for other people. Thriving is for people who own assets. Assets pay you while you sleep. Cash just sits there and gets smaller. When you look at the most successful people in the world, they don't have billions of dollars in a checking account. They have equity, they have real estate, they have intellectual property, they have things that appreciate. They use debt strategically, and they keep their cash levels optimized for movement, not for stagnation. You have to start thinking like a mogul, even if you're starting with a small amount. The principles are exactly the same whether you have $1,000 or $100 million. It's about the mindset of deployment. The hidden risk of cash is that it feels good, it feels stable. But that stability is an illusion. It's like standing on a dock while the tide goes out. You think you're on solid ground until you realize the boat has left and you're stranded. You need to be on the boat. You need to be in the game. Stop treating your money like a security blanket and start treating it like a weapon. It is the only weapon you have in the war for financial freedom. If you don't use it, you've already surrendered. And I don't know about you, but I never surrender. I win. I find the yield, I find the growth, and I make sure that every single penny I own is working harder than I am. That's the Mr. Wonderful way. And if you're smart, it'll be your way too. Wealth isn't a secret, it's a system. And the first rule of the system is never let your cash get lazy. Give it a job, give it a deadline, and hold it accountable. If it isn't performing, move it to something that will. That is how you win. That is how you stay ahead of the curve, and that is how you make sure you're the one buying the assets when everyone else is panicking because their safe cash isn't worth what it used to be. Now let's get into the mechanics of why this cash is king mantra is total garbage in a world of debased currency. When people tell you to stay in cash, they are usually selling you something, usually a sense of security that doesn't exist. I've lived through several market cycles, from the sky-high interest rates of the early 80s to the tech bubble and the great financial crisis. In every single one of those instances, the people who stayed in cash too long were the ones who got absolutely decimated. They weren't decimated by the crash, they were decimated by the recovery they missed. If you aren't in the game, you can't score. It's that simple. You're standing on the sidelines while the greatest wealth creation machine in history is running at full throttle. What most people don't understand is the concept of purchasing power parity. You might have the same number of dollars in your account that you had 3 years ago, but those dollars don't buy the same amount of steak. They don't buy the same amount of gasoline. They certainly don't buy the same amount of real estate. So in real terms, you've lost 20, 30, maybe 40% of your wealth because you were too prudent to invest. That's not prudence, that's financial suicide. I look for assets that have pricing power. I want to own companies that can raise their prices when inflation hits. I want to own pieces of the infrastructure that the world needs to function. If you're holding cash, you own nothing but a promise from a government that is currently printing more of that promise every single day. Does that sound like a winning strategy to you? It sounds like a disaster. Let's talk about the psychological trap of the correction. Everyone is terrified of the next big drop. They watch the news, they see the red tickers, and they freeze like a deer in headlights. I love corrections. I lick my chops when the market gets bloody. Why? Because that's when everything goes on sale. But you can't take advantage of a sale if you don't have a system for your capital. If you're sitting on 100% cash, you're usually too scared to buy when the time actually comes. You'll wait for it to bottom out, and by the time you feel safe again, the market has already rallied 20%. You missed the boat. Again, my strategy is simple. Stay invested in high-quality, dividend-paying stocks. Even when the price of the stock goes down, the check still arrives in the mail. That dividend is my shield. It's my rent for owning a piece of a great American or global business. While you're staring at a stagnant savings account, I'm compounding my returns and buying more shares at a discount. I'm a big believer in the 5% rule. I never let any one position grow to more than 5% of my portfolio, and I never let any one sector represent more than 20%. That is how you manage risk. You don't manage risk by hiding in cash. You manage it through diversification. If you're diversified, you don't have to fear the volatility. You embrace it. You recognize that the market is a giant weighing machine that, over time, rewards productivity and punishes stupidity. And let me tell you, there is nothing more stupid than letting your capital rot while the world innovates. Look at the technology sector. Look at what's happening with AI and healthcare. These are generational shifts. If you're holding cash, you're not a participant in that growth. You're a spectator, and spectators don't get paid. They pay to watch the winners play. I want you to understand the drag of cash on a long-term portfolio. If you have $1 million portfolio and you keep $200,000 in cash, that 20% of your money is earning zero or near zero. To get an overall return of 8% on your total wealth, the remaining $800,000 has to work significantly harder to make up for the dead weight of that cash. You are literally handicapping your own success. You're running a race with a backpack full of bricks and wondering why the guy next to you is winning. Drop the bricks. Put that capital into something that generates a return. I don't care if it's an index fund, a REIT, or a high-yield corporate bond. Just get it out of the mattress. There's also the tax element that people conveniently forget. Inflation is a tax on people who hold cash. It's a hidden tax that requires no legislation and no vote. It just happens. If you want to protect yourself from the government's voracious appetite for your wealth, you have to own assets that appreciate. Capital gains are often taxed more favorably than ordinary income or the interest you might get from a bank. By staying in cash, you're setting yourself up to be the ultimate victim of the fiscal system. You're being squeezed from both sides. Inflation is eating your principal, and the lack of growth is killing your future. It's a pincer movement on your retirement. You have to be smarter than that. When I'm on Shark Tank, I'm looking for founders who know how to deploy capital efficiently. If a founder tells me they want my money just to have it in the bank for a rainy day, I'm out. I want that money spent on customer acquisition, on inventory, on R&D, on things that move the needle. You should treat your personal life the same way. You are the CEO of your own life. Would a CEO of a Fortune 500 company tell the shareholders, hey, we have $50 billion just sitting in a checking account doing nothing? No. The shareholders would fire him on the spot. They want that money reinvested or returned to them as dividends. You are your own shareholder. Why are you letting your CEO get away with such a pathetic performance? The reality of the world today is that safe has been redefined. In the 1970s or 80s, you could put money in a CD and earn 10 or 15%. Those days are gone. They aren't coming back anytime soon. We are in a low-growth, high-debt environment globally. In this environment, the only way to stay ahead is to own the means of production. You need to own the companies that provide the services and products people can't live without. Whether it's energy, technology, or consumer staples, these assets have intrinsic value. Cash is just paper. It's a medium of exchange that is being manipulated by central banks around the world. Don't put your faith in a printing press. Put your faith in the cash flow of a well-run business. I've had people come up to me and say, Kevin, I'm waiting for the big one. I'm waiting for the total collapse so I can buy everything for pennies. Listen to me. If the total collapse happens, your cash probably won't be worth anything anyway. If the entire global financial system evaporates, we'll be bartering with canned goods and ammunition, not $20 bills. So the total collapse argument for holding cash is a fallacy. You have to bet on the world continuing to turn. You have to bet on human ingenuity and the desire for profit. That bet has paid off for hundreds of years. Betting on cash is betting on stagnation, and stagnation is the enemy of prosperity. It's a loser's game. I want you to take a hard look at your emergency fund. Most people have an emergency fund that is way too big. They've been told by some financial guru to keep 2 years of cash. That is insane. That is 2 years of growth you will never get back. In today's world, you have access to credit, you have liquid assets you can sell in seconds, you have multiple ways to cover a short-term hurdle. Keeping a mountain of cash for a what-if scenario is costing you a fortune in the long run. You're paying for a very expensive insurance policy that has a 0% payout. Stop being so afraid of the what if and start being afraid of the what then, as in, what then will you live on if your money hasn't grown? You have to balance the need for liquidity with the necessity of growth. Right now, most of you are tilted way too far toward liquidity, and it's starving your future. Here's the final part of the script. So, what's the end game? How do you stop being a victim of your own caution and start acting like a predator in the markets? It starts with a fundamental shift in your DNA. You have to stop looking at your bank balance as a scoreboard and start looking at it as an inventory of soldiers. If those soldiers are just sitting in the barracks, they're eating your rations and providing zero defense. I want my soldiers out in the field, taking ground, capturing yield, and sending reinforcements back home in the form of capital gains. That is how you build a fortress that no inflation, no central bank, and no politician can tear down. One of the most powerful tools you have is the Dividend Reinvestment Plan, or DRIP. When you hold cash, you get nothing. When you hold a dividend-paying stock and you reinvest that cash, you are buying more shares automatically. Those shares then produce their own dividends, which buy even more shares. It's a snowball effect that turns into an avalanche of wealth over time. This is the secret sauce that the wealthy use to distance themselves from everyone else. While the average person is trying to save their way to wealth, which is impossible, the savvy investor is compounding their way to freedom. You can't compound a stack of $100 bills in a safe. It doesn't grow. It just gathers dust. I often say that money has no soul. It doesn't care about your dreams, it doesn't care about your family, and it certainly doesn't care about your fear. It only follows the path of least resistance to the highest return. If you treat money with too much emotion, you've already lost. Holding cash is an emotional decision. Investing it is a logical one. You have to be disciplined enough to strip away the fear of loss and replace it with the logic of growth. Look at the most successful companies in the S&P 500. They aren't hoarding cash to feel safe. They are using it to buy back shares, acquire competitors, or expand into new markets. They are aggressive. If you want to be wealthy, you have to adopt an aggressive posture toward your capital. Let's talk about the cash drag on your retirement. If you are 10, 20, or 30 years away from needing your money, holding more than a sliver of cash is a crime against your future self. Every 1% you lose in potential return over 30 years could mean the difference between retiring at 55 or working until you're 75. Do you really want to trade 20 years of your life for the comfort of seeing a certain number in your checking account today? That is the most expensive comfort in the world. I wouldn't pay that price, and you shouldn't either. I'm in the business of buying my time back. The only way to buy your time back is to have assets that work so you don't have to. Now, I'm not saying you should be reckless. I'm a shark, not a gambler. There is a massive difference between calculated risk and blind luck. Calculated risk means you've done the homework, you've diversified, and you've accepted that the market will go up and down. Blind luck is what people are hoping for when they sit in cash waiting for a crash that might not come for a decade. By the time it does, the market might be 200% higher than it is today. Even a 50% crash at that point leaves you far behind where you would have been if you'd just stayed the course. The math doesn't lie. People lie, emotions lie, but the math is cold and beautiful. I want you to audit your life tonight. I want you to look at every dollar you own and ask it, what have you done for me lately? If the answer is nothing, then you need to fire that dollar and find a replacement. Put it into a diversified ETF, buy a fractional share of a high-quality company, or look into REITs that pay you monthly rent without you ever having to fix a toilet. There are so many ways to get a yield today that there is absolutely no excuse for being 100% liquid. None. It's laziness, plain and simple. And in my world, lazy gets you crushed. If you've enjoyed this wake-up call, do me a favor. Hit that like button. Not because it makes me feel good, I don't care about that, but because it tells the algorithm that people actually want to hear the truth about money instead of the usual save your pennies garbage. Subscribe to the channel if you want to learn how to actually build a portfolio that stands the test of time. I'm here to make sure you don't end up as one of the could've, would've, should've stories. I want you to be a success story. The hidden risk of cash isn't just that it loses value, it's that it makes you soft. It makes you think you're safe when you're actually vulnerable. It keeps you from developing the muscles you need to navigate the real world of finance. Don't be soft. Be disciplined. Be calculating. Be a shark with your own money. Take that cash, put it to work, and don't look back. The future belongs to the owners, not the savers. Which one are you going to be? Make the choice today, because every day you wait is a day of growth you can never get back. Get out there, get invested, and let's make some money. Now, I want to hear from you one last time, based on what we talked about. What is the one asset class you're going to move your lazy cash into this week? Is it stocks, real estate, or something else? Drop it in the comments. I read them, and I want to see who's actually taking action and who's just watching. Don't just sit there. Move. I'll see you in the next one.